It's Sunday the 17th of September 2017. Resolute Gold's a stock that I've been following for a few years now and was really happy with the performance they had last year. They had this really great move, probably one of the best performers in the ASX 200 last year, having this move from 25 cents in January all the way up to 230, 240 in September. They did a nice capital raising near there as well, and now they're looking to grow their production profile. But in the interim, they do have a few issues. They've only got two operations that are both having to mine from stockpiles, and I'm a little bit concerned. I like the attitude of this company, and I was really heavily interested in these when it got down to these low $1 in the last couple of months, and I was acquiring stock. But a few things sort of worried me in the last quarterly that caused me to sell a little bit and sort of hold off. I guess one of the things I've learned in gold mining investing in the last few years is just if you're uncertain about anything, just get out. And there's been a good little chance to do that in the last few weeks, so I've lightened my holding. But I'll just highlight some of the things that I was concerned about. Obviously, they've got quite a good cash balance. They've got this 290 million in the bank in terms of, well, it's not 290 million in the bank. It's cash and bullion and some listed investments in some other ASX explorers. But the all-in sustaining costs last quarter were very high at Syama. So their sulfide circuit there, they were getting costs above almost 1,800 Australian. So I think it's probably 1,400 US. So they're losing money on every ounce produced there, and I think that's probably going to continue in the next quarter or two. I just listened to the quarterly conference call as well. They're always good if you haven't listened to those sort of things before. It's available on the company website. But they're looking to produce some development ore from the Syama new underground development, and that they're expecting the grade there to be about 3 grams a ton, and mixing it with these stockpiles at 1.4 grams a ton. I think they're aiming for somewhere of the grade about 2 to 2.5 grams. And if they sort of are at the bottom of that if they're more like 2 grams a ton, I think you're going to see performance like last quarter, where they're losing money on those ounces. And I'm not sure about the oxide circuit. I think that's sort of ticking along and will continue to be relatively profitable, but it's lower production. The other one is their Australian operation at Ravenswood. Now Ravenswood, their last quarter there was reasonable at 1,300 Australian all-in costs, but from listening to the quarterly and just some of the language in this report here, I think they're going to be more toward this $1,600 plus sort of level Australian in the next quarter or two. Their guidance for the financial year 2018 is only 80,000 ounces. So they're going to be more like this 20,000 ounces. And I think that's probably going to be, and there's the mining at Nolan's East, I think is going to make up a lot more of the ore feed. And you can see that's a much lower grade material. So I guess the mining costs there are higher as well. And so I'm thinking the cost here, and particularly some of the listening to the way the CEO described it in the conference call, it kind of makes me feel like you could even see a number out to maybe $1,800 an ounce. So I'm a little bit concerned about those things, and with the high capex at both of those operations, you could see a large burn in the next quarter or two, and that's why they did that capital raising up at I think it was about $2 or $2.20 last year, and that they raised a good sum of money, because I think they're going to need quite a bit of it to get to production, get to the new production levels at both those operations. So I'm a little bit concerned about that, but I do like. I mean, some of their exploration results are really excellent compared to what some of the other ASX companies are doing. This Nafolo deposit, which is adjacent to Syama, has some really good grades, and it looks like, listening to the quarterly conference call, there was some talk about whether this could be a expansion opportunity to expand production at Syama, expand the milling capacity, and even then I think that the CEO is sort of saying that it's possible that they with some efficiency gains in other parts of the processing circuit, they could get up to a much higher number than what they have now. I think maybe they're sort of capped at about 3 million tons per annum at the moment, but he's saying that with some efficiency gains, that number could get up to sort of 4 million tons, and that's without sort of real expansion. So that these ounces, this looks like it could be a sizable resource, and obviously quite easy, much easier to mine than having to explore somewhere else and truck the ore there. That's right next to the Syama deposit. So looking like it could be a real game changer in the medium longer term. But just in the short term, I think it's a good time to be cautious and not to overcommit into this stock. I'm not sure. The analysts on the call and everyone else in the market should understand that those costs may be elevated for the next few quarters, and maybe that's built into the stock price. But in my experience, when a high cost number hits in a quarterly production result, it's very rarely in the stock price, and the stock will sell off regardless of how it was expected by some of the the more professional investors. So just something to be aware of there. I do like the operating improvements they've shown in the last couple of years. Good focus on sort of technical know-how. I mean, he made a comment in the conference call about how some of the lessons they've learned in Queensland at Ravenswood can apply to the mining methods at Syama. So they've really, I think they've got quite a good approach, and I really like his conviction in terms of buying on market. I know there's been a little bit of controversy with him, a broker selling his shares without his knowledge, supposedly. I'm not really sure what to make of that. But in general, he's been a buyer on market, and a pretty savvy one at that. And some of their hedging performance has been pretty good as well. So I like how the company's performed, but I just think in the next 3 to 6 months, it's a good time to just sit and watch a little bit. I don't know if there's going to be a lot of gains in that period, even if the gold price goes up. I mean, they've had that same sort of performance as a lot of the other smaller Australian gold stocks, with even when gold going up over $1,300 an ounce in the last few weeks. They've only had that one little run in the first week of September there, but other than that, it's been sideways, and I think it probably will continue to be. So it's a stock I really like, but I'm just a bit cautious at the moment, and I've sold down my holding to a more reasonable level where I can sleep at night, and I think it's a good time to do that.